What up, team? Welcome back to the HPT live daily recap, right? Where we break down the trades we took, strategies that we were using to get in and out of the market consistently, right? So let me pull up my TOS real quick, and then we're going to dive right into it. Let me just make sure we can go like this. All right, so today I'm going to show you a very simple strategy, but more importantly, a tool that changed my life, right? So moving averages, right? Why do we use them, right? What do they do for us, right? Well, first things first, moving averages are like a hammer or a saw, right? It's a tool that can be very beneficial, but it's also a tool that can be used to destroy things, right? One thing being your equity curve, right? So think about it. You could either build a strong equity curve or you can destroy an equity curve, right? And the tools that you use will play a really large factor in that process, right? So today I want to break down the 50 EMA, right? So anybody that watches my videos know, right? I have three main components that go into my day trading strategy, right? Number one is the critical level or the pit numbers, right? This is previous day high, previous day low, open print, and end of day, right? So I use all of these levels to identify large money and the moves they make, right? Liquidity grabs, break and retest. I look for market structure off these levels, right? Yesterday, we took a play off end of day, right? Which is literally the closing price from the previous day, which was right here. And then as sellers took control of this level, we took a short play, right? And it was crazy because then Powell got on the mic and look at how price rallied right back into it and sold off, right? So these levels are highly, highly effective when used properly, right? So critical levels, pit numbers, that's number one. Number two is market structure, right? So I'm looking for breaks and retests, right? I'm looking for clean market structure. Why do I love market structure so much? Well, it's the only way the market really communicates to us, right? The market moves via price action through candlesticks, and those candles make market structure. They form trends, they consolidate. And market structure is the main way to identify healthy trends and unhealthy trends, right? So market structure, right? Critical level market structure. Number three is my moving averages, right? I need my moving averages to help me determine the trend. Do the buyers have the ball? Do the sellers have the ball? Who is it a healthy trend, right? Look at this sell-off we got this morning. It was intense. Literally, the S&P 500 was selling off like no other, right? And I think it's due to, there's a lot of war news catalysts going on in the Middle East. Iran pointing missiles, whatever it is, it doesn't really matter. At the end of the day, it's adding a lot of volatility to the market, right? And that presents us with either opportunity or choppy market conditions, right? And we need to be able to distinguish the difference, right? So price was selling off. I have a chart up here of SPX. Price was selling off extremely fast, right? You can see we got this rally yesterday, and then price started to reject it. We fell below the 50 EMA. We came in a previous day low. We fell below previous day low. Look at the break. Look at the retest here at PDL. Really cool. I love watching it. I didn't trade any of it because it was a very violent move to the downside, and I don't like chasing violent moves, right? See, why don't I like chasing violent moves? Let's break into that. It's extremely important. Number one, right, and it ties in with moving averages, is when you get extended from a moving averages, there is an extremely high chance of price coming and retracing back to the moving average, right? So, I mean, just a really clear example here is as price is selling off, right, we're getting this very large sell-off. If you whip out the 1 hour time frame, you're going to see, look how extended we got from price at one point. At one point, price was all the way down here at 566. The moving average was all the way up here at 569.50, right? So it was $3.50 away. Look at the candle we got. We literally got the pull back into it. The snapback is what we call it, right? So that is what I call an unhealthy trend, right? Just like right here. Notice, watch this blue line. This is the 9 DEMA. Look how extended we get from the 9 yesterday. right? In a very quick amount of time, we got a very large sell-off. And then price literally rallies right back into it, right? That's what we call the snapback. So I don't want to short the market when we're very extended from the moving average. Here's another example. Here's another example. Here's another example, right? So anytime, right? Look at these three candles. We're hugging the moving average. We get a nice trend. Look at these two candles. We're very far away from the moving average. We get the snapback, right? Here's another example. It happens constantly. And what's really cool about it is it doesn't just happen on the 1 hour. It happens on the 5-minute time frame, 2-minute time frame, 1-minute time frame, doesn't matter. See, this is bring it back to the moving averages being a tool that you can use to build that equity curve, right? So think about it with the information I just gave you, right? If 9 times out of 10, when price gets extremely extended from a moving average, right, and there's a very high chance of it snapping back, price snapping back into the moving averages, wouldn't it make sense to maybe take profits far away from the moving average? Wouldn't it make sense to maybe avoid chasing trends when you're extended from the moving average, right? So use your knowledge, right? Your statistic reliability, right? Because it's a statistical fact that when you get extended, it's a much higher probability that the price is going to come back to the moving average, right? So that's one way I like to use moving averages. It really helps keep me patient, grounded, and focused. And it really helps keep me from chasing FOMO and making irrational plays in the market, right? So this morning we're selling off, right? Super fast. And, there was a part, there was a time in my trading when we were selling off like this, I would, maybe feel some sort of way because I was missing it. Now I don't care, right? I literally don't give two shits if I miss a trade. Daddy. Sorry, baby. I'm sorry. Won't happen again. Right? Because, let's seriously, if I care about missing the trade, it's going to put me in an irrational state of mind, right? Where that FOMO is going to settle in, right? The fear of missing out is going to literally cause me to act irrational, unprofitable, right? And make decisions based on emotion. Anytime inside or outside of the market, you're making decisions based on emotion, you're failing. Right? That is not the way you want to trade. That's not the way you want to live your life, right? Think about it. You want to be able to process things from an objective state. You don't want to be making emotional decisions, right? And go through your data, like we were talking about yesterday. If you're struggling with FOMO, go through and look at all your losing trades, count up the dollar amount, and go, okay, out of all these losing trades, how many of them was I chasing a trend or acting out of FOMO, right? And you'll realize that number is extremely high, right? For me, it was over 80%. So out of all that money I lost in the beginning, right, 80% of the time, it was caused from FOMO, right? With that knowledge and understanding, why would I continue to chase losing extended or violent trends or sell-offs or rallies, right? So price is selling off. I'm sitting very patient. And remember, I don't want to short down here because of how extended we are from the 1 hour time frame, 9 DEMA, right? So at this point, I'm patient, right? And then I'm going to whip out the Discord here and you'll see just being extremely patient right here. Snapback, right? With a thinking face, right? Watching what happens here at previous day low. See, all my traders on my team, they know when I say something like that, right? I'm basically saying, hey, I want to be patient and see what price looks like when it comes back and revisits the 9 DEMA, right? Snapback, right? Staying patient. Let's see what happens here at previous day low. Staying super patient, etc. Right? And then now let's break into the trade we took, right? So the morning I'm super patient and I'm sitting back, allowing price to do its thing. And I go, okay, if and when price comes back to PDL, let's see how buyers react, right? So notice price rallies in the previous day low. There's really no structure here for me. And remember, if I'm below this blue line on the 1 hour, I am not longing the market. It's that simple. I do not go long if I'm below the 9 DEMA and if I have other leading factors telling me that conditions are bearish, right? So at this point, I'm staying extremely patient. And then I go, okay, price is coming into that 50 EMA, right, over here on SPX. right? We got previous day low right next to it, right? So I'm being very patient. I want to see how price reacts here. Remember, I'm not longing anything because of what the 1 hour time frame is telling me, right? We're using that top down approach, where I would rather stay completely patient and maybe miss the trade, doesn't matter, right? But I'm not going to break my trading rules. See, the reason I won't long when the 1 hour time frame is below the 9D EMA is because in the past, that's where a lot of my losing trades come from. See, this is where traders get it confused. Every decision I make is intentionally placed in my trading plan based on my journal, right? See, traders don't understand you cannot just adopt someone else's trading strategy. That's not going to work. I don't want to say it like that, right? Yeah, if you adopt my trading strategy, you're probably going to do well, but until you tweak it, redefine it, and modify it to tailor your trading style and your trading issues, you're not going to see the results you want, right? So think about it. You got to take your trades, you got to follow a strategy, right? But more importantly, you have to document your results and then make adjustments, right? Tons of my losing trades came from FOMO, chasing trends, and decision. I just want to happen earlier in the day, right? So anytime I'm in a downtrend, right, I'm like, okay, I'm very interested to see what price is going to look like when it comes back and retest the level where buyers showed up and sellers completely decimated them, right? Buyers showed up here, sellers took control. Now buyers are back at their regular positions, right? So maybe these buyers that hopped into the market, maybe they're down 20%, 30%. And then as price comes back into their level, maybe they're down nothing, right? So think about how many times you were in a losing trade and you actually got your money back. What do you usually do? You say, thank you, God, and you get out of your trade, right? Literally, that's the psychology behind the break and retest, right? Market structure is literally a graphical presentation of human behavior, right? It's literally a chart pattern is nothing other than human behavior. And you literally have, in this scenario, buyers that previously went long stomping out of the market. It's right there, right? There's our first one right there at 12.15. And then price comes up, right? Check this out. How do you identify the weakness? Well, great question. The GBI, right? You get the green bar completely ignored. Price rips down, comes back up into this level where sellers start to come in, right? So now if I whip out that 2-minute time frame, which is our sniper, that's our sniper time frame. You're going to see price comes in, and on this candle right here, I enter the market short once it wipes out the previous candle, and now my stop is above the zone. So now I'm in the market short. We've identified weakness. We've identified the rejection off the 50 EMA. I have a clear place to put my stop loss, and I have a clear target, right? My downside target is going to be this candle right here, or when I hit a specific amount of return. So on this trade, right, price came down in the previous day low, and then notice here we're also breaking the 2-minute 50 EMA, right? And then price continues to stomp out the previous green bar ignored, second green bar ignored, third green bar ignored. We rip all the way down to our target. We lock in, like, I think it was 57%. Let me see. I want to see what we locked in here. Pretty sure it was, 57% return here on SPX trading one contract, right? And that's the thing, guys, right? Like, understand your tools. SPX is a tool, right? I trade SPX when I'm looking for a quick move, maybe later in the day, right? I could literally trade one contract. This contract cost me around $800, right? And on that trade, I'm literally risking $200 of it. So I buy a contract for $800. I put my stop loss in at 600, right? So I'm only risking 200, and I literally make 500, right? That is like what's that, like a 1-to-5 risk or 1-to-4 risk reward ratio, right? Really good. I'm only risking 200 to make a potential $500. That's what we call an equation, right? That's my goal every single day. My goal every single day is not to capture the biggest trade in the market. It's the only trade I took. Literally, the only trade I took today, right? A very simple, clean break and retest here off the 50 EMA, right? And we had people on Discord, right? They're really pumped. They like to be a part of it. And more importantly, we're literally just executing our edge, executing our strategy, right? Let me show this one more time because I think my YouTube face was right there, right? But here's the picture of the trade we took. We got the rip into the 50 EMA on the 5-minute. We got our GBI, right? Price completely ignored it. We take the market short on this candle right here. So I want to show you guys. This is how I log my material, my trades. When the market looked like this, I was entering short, right? Well, let me do this because once again, I think my YouTube thing is in the way. So this chart on the left, right here, this chart, when the market looked like this, I was buying the sell button. I was buying the put option. This is what the market looked like. You need to learn to burn this into your brain, right? I take entries very serious. Not that I need perfect entries, but I want clear, specific price action and reasons to pull the trigger, right? So I'll study this entry. I'm like, okay, are buyers strong here at PDL? Absolutely not. Why not? How do we know they're not strong? All right, well, 1 hour time frame is bearish. That's the first. Second is we're ripping off the 50 EMA on the 5-minute time frame, right? If I whip out the 5-minute, we're literally ripping off the 50 EMA. Hold on, SPX, right there, right? So we got 1 hour trend. We got rejecting the 50 EMA. Ready? Here comes the most important part. We're getting a green bar that's completely being ignored, right? So we literally have price action telling us, hey, guys, buyer showed up, but the sellers completely ignored whatever it was they're doing, right? So disrespecting buyers. And we're off the critical level. Now, let me ask you this. What's the moving averages look like? We're literally getting an EMA cross here as I'm entering the market short, right? Are we extended from that blue line on the 5-minute? No. Are we extended from the blue line on the 2-minute? No. Okay. One more thing. Where's that blue line at the 1 hour time frame? Ready? Remember we wouldn't short the market down here, right? Because we didn't want to chase price for far away from it. Look at what happened when price. Oh, hold on. I don't think you guys can see it. You got to see this. This is the hook line stinker. I'm gonna pull it up on this chart. So remember earlier in the video, we said we weren't going to short the market when price was all the way down here because of how far we were from the 9 EMA, right? We were $3 away. What happened when we got the pullback into it? We rejected it. We literally rejected it and price continued with trend, right? So guys, next time you're about to short the market and you're super far away from that line on the 1 hour, maybe you should be patient, right? This has been a really big contributing factor to my trading lately. I highly recommend that you start to use moving averages more. They're a phenomenal tool, right? And like I said, tools can either build your house up or they can tear them down. Right, so that was today's trade. One trade. I was really proud of it. Once again, I really like the way we executed it. More importantly, I'm very proud of the patience that we displayed today. Right, we didn't rush the morning. We didn't chase the morning. Super patient. During the storm, we were literally relaxing. We were not overthinking it. We were staying extremely patient. We didn't chase. We didn't fight the trend. Right, we stayed very patient, traded with sellers, and we identified very tight risk and executed very well. Right, one more time, just want to show you guys exactly what it is, the trade we took right there, boom. And what's really funny is the same exact setup literally presented itself right here. Ready? Bam. Right off PDL. Happened again. So, guys, once again, and then ready? You want to know the coolest part about all this, right? Notice the GBI here that we went short on. Look what happened when it got retested later in the day. When GBI turns RBI, she rips, right? It's crazy. Once again, market structure is literally nothing other than human behavior, right? So, one more time before we go, what's the 3-step process, right? Critical level, pit number, right? We want to only trade off the levels that have the liquidity, right? We do not want to trade off levels that are in between pit numbers or critical levels, right? You don't always have to literally only trade the pit numbers, but it's really not a bad idea to start there. It's done tremendous things for me. So number one is critical levels and pit numbers. Number two is your market structure, right? Where's the break and retest, right? Who is currently in control of the market and how can I trade with them, right? And then number three is your moving averages. Use your moving averages to identify your trend, to identify your market conditions. Is it healthy? Is it unhealthy? Guys, this right here, super healthy trend. These are trends you want to hold, right? And just some real quick background before we hop off here. The 9D EMA, where does it come from? Why do I love it so much? Well, I initially started using it as a tool to hold on to my trades, right? So everyone struggles with holding on to trades, at least any like human trader that's, failed a little bit, right? So a tool I used to use and still do is the 9D EMA on the 5-minute, meaning if if I'm in long and price is holding the 9, I'm staying into the trade, right? I've seen traders also do it on the 2-minute, whatever floats your boat. But then it started to become much more than that, right? Because what happens when price looks like this? Say we're in the market long here, and let's say right here you're up, I don't know, 20%, 22%. And you're very extended from the 9D EMA. Yeah, we're above it, but you cannot be that binary, right? Where you're like, oh, I'm above the 9, so I gotta hold it, right? No. Ask yourself, yeah, we're above the 9, but how are we above it? Are we extended, right? Or are we hugging it? Look at the short play we took. Just hugging it, hugging it. Price was hugging the 9. Want to stay in it. Look what happened when we got far away from it. We got the snapback, right? Just like the 1 hour, same thing. Now, right here, we get extremely extended from it, right? Do you want to hold on to that? Or maybe you should book that. Maybe you should take profits. Maybe you should scale, right? So once again, guys, notice these are healthy trends. Learn to identify them, right? This is an unhealthy trend, right? Rip, space, pullbacks, snapbacks, whatever you want to call it, right? So, guys, I hope you enjoyed this lesson. If you guys want to get involved, you already know what to do. Make sure you hit a like, subscribe, share this video with somebody that needs to learn how to use moving averages or who hasn't heard about the pin numbers. And guys, I love all of you. Seriously, I appreciate all your guys' love and support, right? You guys are literally the reason why I get up in the morning. I hope all of you have a phenomenal week. Let's finish this week strong. I'll see you guys tomorrow.